You mentioned the whole matter of the manipulation of precious metals prices, and there's quite the story out there right now in front of the Gold Antitrust Action Committee, allegations against J.P. Morgan Chase of serious manipulation, involvement in the markets, short selling on silver and gold, and it even contains a whistleblower who seems to have become the victim of a hit-and-run accident in London, the stuff of which made-for-TV movies are written. Give us a little background to this and tell us why, if at all, we should pay attention to it.
Well, Sterling, this is really a big deal, and as you say, this could actually end up someday becoming a Tom Clancy novel. But the things that have happened just in the last couple of weeks have been just amazing. As you know, the Commodity Futures Trading Commission, after a number of years of being prodded to do so, to look into charges of manipulation in gold and silver by some of the big banks in the United States, short selling against silver that they don't even have, they finally agreed to begrudgingly to hold a public meeting and air the results of this. And so they had individuals come and testify, and one of them was Bill Murphy of GATA. And when he got up to testify, the mic went silent for this external feed for about 5 minutes while he was talking. And you just have to wonder, even non-conspiracy theorists might have to wonder about this one. And then a couple days later, after an individual had testified from London, he was a trader who actually gave chapter and verse on a particular manipulative instance that occurred in the markets that he was intimately aware of, and provided all the documentation and everything else. After his information was made public in this sphere, he was almost killed. He was run over in a hit-and-run accident, I believe in London, which you just have to wonder now, could this be coincidence, or am I just being conspiratorial?
Well, neither you nor I are wild-eyed conspiracy theorists, and yet here we are talking about the sort of story that has been out on the Internet in the form of a conspiracy theories for years, David. Suddenly, it has more credibility currently than ever. Why the turnaround with respect to people suddenly going, really?
I think the examples of what we just talked about here, the things that have happened in the last couple of weeks, and even, Sterling, if you discount all of what we've talked about here in terms of the manipulation by the major banks, which we know is almost a proven fact, the reality is, beyond that, there is much trading of paper silver that does not have any real silver underneath it, and the same with the gold. And I think down the line, before this bull market is over, when that becomes really public knowledge, just how many people that think they hold gold and silver under a contract, but really through leasing and other issues don't have it at all, I think that will be a massive movement in the market when that becomes public knowledge, and will cause a huge move upward in the price, because this does exist. It's just a matter of quantifying it and bringing it to the attention of the general public, who actually feel that they have the metal in their accounts.
How then does a person best adjust his or her holdings currently to, be prepared for what might evolve out of these inquiries?
Well, first of all, I think they need to look and see that their gold and silver is theirs, that they physically hold it, that have it under their own control. And if they have it, let's say through a bank or through a major investment house, that they have allocated rather than unallocated. And if it's allocated, that means it's in their name and it's separated physically from other people's holdings. But if it's in unallocated, it's kind of like a pooled account, and your gold and silver supposedly in there with a bunch of other people. And so you really don't know if you have it, and when push comes to shove or you try to withdraw it or whatever, you may find out that you're just given a paper slip for it. And it's one thing to be paid if you were paid the value of that gold and silver on that date, which you might be, but then you wouldn't have the metal. But secondarily, what I think will happen over time is that the bid-ask spread will widen enormously on the metals as they become more volatile, and you may be paid at the bid where the ask might be many, many dollars higher. So you wouldn't even be getting fair compensation for the current market price of your metal if you didn't know it was in your name.
All the greater reason, therefore, to own physical silver and gold and stay away from the paper stuff, right?
Very definitely, as much as possible. Now, there's nothing wrong with GLD and SLV, the ETFs, as trading vehicles, but don't think just because you own those shares that you have any claim whatsoever to the real stuff.
David Smith, interesting words of warning, and always a pleasure to speak to you. Thanks so much for this. We'll look forward to your future contributions on the Morgan Report.
Very good, Sterling. Have a great day.